How is the current rental market in Nairobi? This is the question on many investors' mind. Hello, my name is Wendy Ojiro. I'm a realtor based in Nairobi. And in today's video, we're going to be talking about the current rental market in Nairobi. What are the trends and what are the opportunities? This video will be ideal for investors, landlords, and renters. You will gain a few insights to help you make your next move. So Nairobi is the hub of East and Central Africa. We have enjoyed a lot of growth in the previous years, and this will continue for the foreseeable future. We have attracted a lot of local and international investors, and this has been translated into the residential market. So we'll look at what exactly is driving the rental market currently in Nairobi. So first of all, anytime business grows, the economy grows, then naturally the demand for residential real estate grows. Another thing is that Nairobi is a renter's market. Only 10% of people who live in Nairobi own their property. And this is in a town with more than 5 million people. Only 10% own, and the other 90% rent, which means that there is a real market for the rental. There's a real demand in the rental market. So what has been happening in the market? First and foremost, we have seen more inventory in the market. When we look at, let's say 15 years ago, when you could only go up to 4th floor, up to now where you can go up to 25th floor, this is good news for the renters. It means that there's more supply, there's more options, and for investors, it means that the properties have gotten cheaper because there's higher supply. So currently, we have more options in the market than ever in the history of the rental market. So this is something to take advantage of. Second, we have seen an increase in rent prices. The rent prices have significantly increased, and this is especially the case in Westlands and Lavington. And you see this a lot in new properties. And of course, new properties always get a premium. When your property is newest is when you get the highest rent possible. So we have seen properties escalate. Right now, you can get a 1-bedroom in Westlands for up to 100,000, which was not the case before. This is good news for investors because it means that you will get a good return on your property. When it comes to the older properties, we have seen prices stagnate and in some cases go lower. So this means that landlords need to invest back into the property. Doesn't mean necessarily if you're in an upmarket location, your rent will continue to go up. It highly depends on your property. So if you're a landlord, this might be the time for you to upgrade your property so that you can also enjoy the higher rent prices that we are getting in the market. When it comes to the tenants, what do higher rent prices mean for you? It means that number one, you should be looking for more value. Make sure that you get the maximum value that your rent can offer. Make sure that you explore all your options because never have you gotten a time like this where you have a variety of options. And also make sure that when you are making a move, it is well thought out. Are you able to plan out your move so that when you get into a property, you can stay in it for like 5 years? Because remember, inflation is going up. And remember, every time you move, let's say maybe you're moving every year, every time you move, you're paying the current market rate, which is always changing. But if you get into a property you like, you'll be able to lock in a rate for a longer time. Because when you're inside a house, your landlord will not escalate the rent as much as when you're entering a new property. So renters, even though we have high supply, you have to think very well before moving into a property. Can you sustain it? And can you lock in this rent for a long period of time? Think long term. Another huge change that we're seeing in the market currently is demographics have changed. Our tenants have gotten much younger. When we look at Lavington, Westlands, Kileleshwa, these were traditionally family areas or having tenants who are much more mature. We had more 3 bedrooms or 2 bedrooms and SQ. But when we look at like the past 7 years, we have gotten smaller units, we have gotten younger people. Like your average tenant right now is most likely going to be between the age of 25 to 35. What does this mean for both investors and landlords? You have to think about your end tenant. What do this demographic demand? What are their needs? And then make sure that your property is in line with the current market tastes and preferences of your demographics. And when we look at young people, what do they value? When they're living in the city, they're willing to live in a smaller space, but it needs to be modern, it needs to be functional, and it needs to match their lifestyle. Because right now, people are buying for lifestyle, regardless of the price point. What are the amenities? What is the convenience? The rental market, the renters are now more discerning. They want value for their money. They have options. They are online. They are exposed to variety. So you have to think the demographics have changed. Taste and preferences have changed. And this has affected the rental market. So you have to make sure that your property matches what the buyers currently want. The next thing that is happening a lot in our rental market is the short-term rentals. So that is furnished apartments. There has been a significant rise of listings in Nairobi. If you look at the Airbnb platform, there are more than 30,000 listings. So it means that a huge market of our rental market is being covered by Airbnbs and short-term rentals. So what does this mean? It means that as an investor, this is an avenue that you can look into. Nairobi is a strong market that will continue to attract visitors who come both for work and pleasure. There is a sustainable market for furnished apartments if it is well planned. And we'll also see a huge growth in furnished apartments. I foresee a growth, especially next year, because late in October 2024, the digital nomad visa was introduced in Nairobi. So that means that once it is fully in place, people will be able to come to Nairobi and work here legally without a work permit, as long as your income is above $55,000. So we are in the age of the digital nomad. You'll be working 3 months in Nairobi, 3 months in Seychelles, 3 months in Cape Town. Those are the times that we are currently in. And again, look at your demographic. Your demographic is young. They want flexibility. They don't want to be tied down with a long-term lease. So our current rental market needs a lot of flexibility. It's not like in the old days when someone would take a house, stay in it for 10 years. Right now, people are very flexible and they're staying for months or maybe a year, maybe 2 years, but definitely we're seeing shorter rental durations. So put this in mind as you choose a property to invest in. And if you're already a landlord, think of how you can alter your property to meet current demands. Another thing that we are seeing is due to the flexibility again and being able to work remotely, the satellite towns that are neighboring Nairobi are growing a lot. So when you look at Tatu City on Thika Road, you look at Tilisi on Wayaki Way in Tigoni, you look at Machakos and Syokimau, there's a demographic that is shifting to those sides. It is a mix in ages, but mostly it is the mature market that is moving to that side because they want more space, they want more value for their money, and they want a place where they can raise a family, where it's quiet. That is also something to look at keenly in the rental market. The satellite areas are growing and they're growing very fast. They're accessible and tenants are open-minded. So we have had people who are moving from Westlands going to live in Syokimau, people moving from Kilimani going to live in Tigoni. The mature demographic is shifting both in rental and sale. So these are some of the trends and opportunities that we are seeing currently in the rental market. Nairobi, as I said, is a strong rental market, ideal for any investor who's looking to jump into this market. We will continue to see a lot of growth supported by strong fundamentals. So if you have any question regarding to investing in Nairobi, or you have any questions on the current rental market, then you can get in touch with me. I'll put my contact in the details below.